We just did a recap with the different forms of business ownership. Let me give you 3 key indicators that you might want to consider becoming a corporation. The first one is if you're already on payroll, that's a good sign, because here's the thing. When you're a sole proprietor, your income ends up on that 1040, you're more than likely paying what's called self-employment tax.
You're listening to The Money Doctor Show, where we talk about all things money for the modern entrepreneur. And I'm your host and founder, Mildred Dillon, CPA. You know, as a modern entrepreneur, you're not just getting up and going to sit behind a desk all day. Chances are you're probably driving right now, mapping your way to your next destination. Because you work online and your systems are mobile, you can work from anywhere. And not key punching, but scrolling through social media, creating your own post to tell the world about your offerings and changing our futures and the world around us, one client at a time. Wow, that sounds like a lot. And it is, but we wouldn't have it any other way. And if this describes you, you're going to love what you hear on this podcast, because each and every episode is designed to give you a tip or strategy that you can use on one of those apps to get your finances in order, in good health, all while on the go. Ready to get to work? Let's go.
Okay, this is where being a subscriber is really going to pay off. As you can see, we are well into the month of March, and we're already just a couple days away from our first major filing deadlines. So that's what I want to talk about in this episode. And there's so many other filings that should have happened by now that don't really get publicized a lot. But for business owners, entrepreneurs, modern entrepreneurs especially, we need to stay on top of these things. And so I want to dive right into the March deadlines that are approaching. That's going to be for the S Corporation and for partnership, either file an extension or file the return itself. And so that's right around the corner. There's also another deadline, if you could see me do the air quotes, that is out there, and that's to request to become an S Corp. So I'm going to dive a little bit into the different forms of organization for business. What type of business should I be? That's the question that I get often. And how that S Corp factors in with respect to the C Corp, which is what we probably hear about the most. Now, what we'll be doing in some cases, we're going to be requesting to be taxed as a corporation, even though we're an LLC or a sole proprietor or a partnership. So I want to talk about the differences there with the different organization types, and then a little bit into why you may want to consider doing some of these requests or maybe not doing anything at all. Now, my methodology with any of this is start where you are, start small. There's no need to start a business and become a corporation right away, unless there is one. And if you're not talking with an advisor, or maybe don't have investors and all of the extra pieces that can go into play with starting a new business, you're just trying to make some extra money. In my opinion, there's absolutely no reason for you to become a corporation, especially if you don't have reports, you don't have any historical idea of what your sales may be, because that's really a key advantage these days to becoming a corporation. You're going to save on taxes that way. So there's no reason to do these things if you don't have a basis to do it. And so I want you to picture someone just like that, starting a business on the side. They're working a job and they've got a hobby that they've been using to make extra money. You are an excellent candidate to start reporting what you're spending in the form of deductions on your taxes. You're going to do that on the profit or loss from business, the Schedule C that goes along with IRS 1040. So in this case, you have decided to just be a sole proprietor. You don't have to fill out a whole bunch of fancy things with IRS to do that. Just include that page on your tax return. You may have to do some things with your state, though, and your local authorities. So definitely check with them with your licensing. And there's some franchise taxes, occupational license taxes. These are different local taxes that vary by locale, vary by state. But for federal purposes, that's pretty much it. Your taxes are typically going to be due for that April 15th deadline, or sometimes it's a few days after. That's pretty much what you need for taxes. Now, this doesn't include, again, even payroll taxes. In that case, you've got taxes due all year. And so I'm going to be providing a resource at the end of this podcast where you'll be able to get a little checklist of most of the things, especially on the federal side, that you should have filed by now. So that's a sole proprietor. Now, in some cases, you might want to be an LLC and not just a sole proprietor. That's called a limited liability company. Although you'll hear limited liability corporation. That's wrong. It's a limited liability company. And yeah, that's the next step above being that sole proprietor. So in that case, you would go ahead and you probably got a name. So in those cases, you definitely need to file some things with your Secretary of State, getting permission to do business that way. And you want to let IRS know that as well, because if you're doing business that way, you're going to be receiving payments that way, 1099s, for example, and you want all of that to match when it gets to IRS. You're going to have probably a tax ID that's not just your social anymore, especially if you've got payroll. And so you see what's happening. We're advancing in our business, advancing in the things that we're filing. So in that case, you're just going to file your taxes again as an LLC, and same thing. It's going to be part of your 1040. You may be hearing that word disregarded entity. As a matter of fact, that's what it's called when you fill out your SS4 to get your tax identification number. That means I'm an entity, IRS, but still tax me as if it's part of my personal finances. And so that's where you're going to see the LLCs. Same thing, profit or loss from business on that Schedule C, and it's part of the 1040. Let's say you're doing so well and you're out in your marketplace, your networkings, and you meet someone who wants to join forces with you. Hey, we should do this together. Now you've got two people who are part of the business, and even if they just contribute financing, or maybe they're actually doing some of the work, you both decide to go into business together or to join forces with the existing business. Now you can no longer be the sole proprietor, but for tax purposes, you are defaulting and becoming a partnership. Partnership is going to be for two or more people in business, going into business. That's how IRS will look at you, as a partnership. Now, I think it's a good time to talk about, since that's one of our more advanced business structures. And it's also one of those, if you remember from my intro, that you need to be filing an extension or filing the return. This is when you will need to look at Form 8832. This is a form that you are now requesting because you are a sole proprietor before or a sole owner, that now that it's two people, you've got to make that change. You've got to let the IRS know about that other person or people. And you do that on Form 8832. And you're going to just check off, we're making a change, and fill out the rest of the form. Now, we've already talked about one person, two people, entities. And I should mention that you may decide for various reasons, and they're very legitimate reasons out there, that instead of being taxed as a partnership, you want to be taxed as a corporation. Same thing. You want to note that on 8832 forms. You want to make that change, and then you want to check off that you want to be taxed as a corporation. And let me tell you, corporations, they right now get the lowest tax rates. Still, as of this recording, things are changing or are being debated right now in Congress. But for now, they get the lowest tax rates, and they get really special options for retirement plans. So as your business grows, you want to definitely look into that. Now, let's talk about the next form of business that you're going to hear about. And I just mentioned it, corporation. But sometimes you want to start small with that corporation. And so that's where your S Corp formation comes in. S Corporation. There's another form that you need to make the request to be taxed that way, because here's what's happening. Corporations get taxed. S corporations do not pay tax. They pay tax on certain forms of income, but that's in very special circumstances. For the most part, when you decide to become an S corporation, you're saying, I want to be that corporation, but I only want to be taxed once, and that's on that 1040, my personal return. And so, because corporations do pay tax, you've got to elect to have this special form of not paying tax through that corporation, but instead being taxed on your personal return. And that's the form 2553. That form is where you're saying, yes, I'm a corporation, but I don't want my corporation to have a tax bill. I want to pay taxes on my personal return with the benefits of being a corporation. Now, we've talked about sole proprietors becoming LLCs. LLCs may be having one or more people, so we're now advancing to becoming a partnership. And maybe we have more than one person, but we decide to be a corporation instead with all of its benefits. To do that, we're using forms 8832 to make these changes, and we're using 2553 to minimize or eliminate what's called double taxation, where with a corporation, I'm paying tax from the corporation and I'm paying tax on my 1040. The S Corp helps you eliminate that double taxation. Okay, so we just did a recap with the different forms of business ownership. Let me give you 3 key indicators that you might want to consider becoming a corporation or incorporating. The first one is if you're already on payroll, meaning you're running your pay through a payroll system, taxes are coming out, you're submitting those taxes to the federal, or if your state has income tax, you're doing this throughout the month or every month, you're on payroll, that's a good sign you could be ready to incorporate. Because here's the thing, when you're a sole proprietor, when you're that disregarded entity, really your income ends up on that 1040, you're more than likely paying what's called self-employment tax. And that's a tax on your profits. That's how that tax is determined, when you have profit. The challenge with self-employment tax is there's no way to reduce that. It's straight based on your profit. As modern entrepreneurs or entrepreneurs at all, we've got to think ahead and plan what's the best use for my extra dollars, my profit, in planning for retirement. So that's why when you become a corporation and you go on payroll, that's the benefit. You're no longer paying that self-employment tax. Even as an S Corp, the taxes are coming out, but that's a benefit and a deduction to your corporation. Not to mention the fact that you're eliminating self-employment tax and you're able to even reduce the amount you're paying yourself in payroll through a concept called dividends. Shareholders receive dividends. Some shareholders receive payroll and dividends. You would be one of those. And so you do not pay self-employment tax on the dividends. So you see what's happening there? It's kind of hard to picture if you don't see some of my examples of the math on this, but that's a reason to consider incorporating. Another reason and a sign that I kind of look for when recommending that someone go ahead and make that classification change to corporation, that's going to be when I'm seeing a lot of profit. I'm not talking about 1, 2,000, 5,000, 10,000, although it's good to have profit. I'm talking about profits of 50,000 or more. Not what you collected. After all your deductions come out, you're still showing that kind of extra money. Couple things need to be happening. You need to put that money to work in certain plans, retirement plans. We have some that we recommend where you don't have to even put it in the market and risk losing any of it. And same thing, you're putting so much of your money instead of in retirement into self-employment tax. And it's just not something that we want to do. So pure profit on top of profit. Your business is doing well. Congratulations on that, by the way. But that's why we want you to benefit from all your hard work. Third sign that I look for when it's time to discuss incorporating. You're already investing in the market through 401ks, IRAs. You're already doing those things, and two things are happening. You need to put away a lot more than these caps that come into play with those plans because of the profits that we just talked about. These plans put your money directly into the market, and we know it's happening right now with our economy overall, but the stock market. The last thing you want to do is lose it due to the ups and lows of the market. Wouldn't it be better you decide how much money you put away for retirement with no caps, and you don't have to subject that money to the highs and lows and the losses of market risk? That's pretty amazing. And that's how we're working with clients this year. You might remember my first podcast of last year. I talked about me transitioning more into this financial planning and longer term planning role. Well, we've got the team to do it. So I wanted to do this podcast to get you thinking that if you're already doing these three things, and what were they? Let's recap. You're already giving yourself a paycheck, not owner draw, where you just write yourself a check, pay to the order of, and you go and deposit it in that personal account. That's not payroll. Payroll is where we're withholding all the taxes and submitting those to the various entities. Second thing, you're making significant profits of $50,000 or more a year. That's a good sign you're ready for the larger entity, that corporation. And third thing that we talked about is that you're already investing in the market through various retirement plans that are putting your money at risk. Values in people's accounts are dropping. It's a big deal. It's really, really a big deal. And it's scary for those who are close to retirement age. So what we can do is help give you alternatives that don't put your money and your profits at risk. Keep in mind, for the entrepreneur, that money means it's our profits. And we did a lot more than just show up at a desk to make those profits. So we don't want to lose any. We want consistent growth that's there for us in our later years. Okay. Here's the resource that I mentioned that I would give to you at the end of the podcast. If you click the link or copy and paste the URL, it will take you to a nice little checklist of all of the filings so far that I've done for clients and that you should have done depending on the type of business that you are and the type of activities that you engaged in even for last year. So I'm going to put that resource, the first quarter taxes checklist is what I call it. And I want you to see that because when we talk about payroll, it's a necessary thing for some of these entity types, but I want you to see all of the things you're responsible for once you start using payroll for your business. It's a big deal and it's year round. There's no once a year only for payroll. It's year round. So go to the URL and you'll get the resource and you'll be able to just look back and see, did I do these things or do I still need to do these things? Because even if it's late, like they say, better late than never, let's get it done. Okay, so we did it. I squeezed in some tax information on this episode. You know I couldn't leave you hanging. Had to go there, especially for my businesses, my more established and growing businesses for sure. Don't forget that extension if you're not ready to file the actual return. Check the IRS calendar. That's all I could say. It changes every single year what the actual due date is, mid-March. That's what I'll say here. And in the meantime, you can always find me on all the platforms at Your Money DR. I'm going to be either sending out those tweets or X's or whatever they're called, Blue Sky, Instagram, never want to forget YouTube, LinkedIn. We've got our podcast page even on the LinkedIn platform and the Money Doctor for Entrepreneurs, both on Facebook and on LinkedIn as well. So I'm going to say thank you so much for listening. Please share the podcast, subscribe, of course, so you can get some of those bonus episodes. If you do listen, would you give us a rating, a review? That would be so helpful. It just helps us get noticed and other people see what we're talking about here. And of course, we've got our next episodes coming up where we're still going to be developing this theme, giving entrepreneurs permission to do some things on the side if they need to in the form of a job, all the things we talked about last episode. So definitely, if you didn't catch episode 47, you'll want to do that. I'm going to say make it a great day, especially for your money. Mildred Dillon, CPA, signing off.